If you're watching this video, chances are you're not one of the 500,000 people making above $1 million every year in America. And if you're not in this top 0.15%, you shouldn't be worried about Biden's capital tax increase. Or should you? In this video, we're going to break down what this change affects the super rich. And more importantly, how we, the masses, are going to be impacted by what they are going to do. A very important thing to bear in mind is these are the super rich people. They know what they're doing. They're the smartest people our country has to offer. And at the end, we're going to look at what we could do to take advantage of this situation. Is it a cause for alarm? Or is this an opportunity? Stay tuned. Hi everybody, this is Uncle Robert. I'm going to give you the best analysis so we can grow our wealth together. Please remember to like this video, and if you're new here, please subscribe. Please share this with your friends so they can make the right move in these unusual times. Let's get started. Many of you were surprised by the Biden's tax hike proposal, as shown in my video over here. But many of you were even more surprised why the market rebounded the very next day. Is everything back to normal? Well, I bet the ultra-rich have made emergency phone calls to the CPA to know what's the best thing to do right now. Should we sell out or should we just hold and pay the higher tax rate later on? I found something really interesting. This is analysis on how our returns will change with the capital gains tax hike. For simplicity, we're going to use the current capital gains tax rate as 20% and the future capital gains tax rate as 40%. We will not consider the state tax rate as that varies by individual, and individuals could relocate at any point of time. We have states with high taxes like California and New York. For the annualized gains, I took an average of the last 30 years S&P gains, which is about 8% per year, and averaged that with the last 10 years of S&P gain, which is about 12% a year. So the number I used was a 10% annualized average gain. I did 5 scenarios over here. For this analysis, I'm not considering future dollars, but just what is invested right now, because this is what the ultra-rich should be worried about. Using a 30 years investment horizon, if we were to use Biden's higher capital gains tax rate, we would actually have 25% less when we withdraw it. So one thought that comes to many people's mind is, should I just pay my capital gains right now at the lower tax rate and to pay the higher capital gains tax rate for gains after today? While that might seem to be a very smart thing to do, it is actually not so. This is because of the power of compounding. Leaving your pre-tax dollars in there compounding at a faster rate year after year after year might give you a bigger overall sum at the end. And even though you take a bigger chunk out of it, you will have more left over. Consider these 3 scenarios. Someone who has 20 years to retirement takes advantage of this low capital gains rate tax. Due to power of compounding, this person actually loses more in the long run. For those with 10 years to go, they come out pretty much equal. The biggest savings come from those who are about to retire, like a few years from retirement. They would see a significant savings by paying off the capital gains today and pay the rest of the capital gains at the higher tax rate when they retire. This is a visualization of how all this works. Feel free to take a screenshot for your reference. Before we answer the question on if this ultra-rich are going to withdraw their money today and reinvest them, we want to look at different scenarios. Take this for example. If we were to consider a lower rate of return every year, this is how the numbers would change. In every scenario, there's less difference from the current tax rate, because as you expect less gains, there's less to be taxed, right? However, this ultra-rich might be invested also in the ultra-high growth, ultra-high returns ETFs or companies. So let's take a 20% annualized compounding rate of return. You see that they have more to lose with this capital gains tax rate hike. Coming back to this IRS number, we see that out of the 500,000 people who are earning more than $1 million every year, the average income is only 1.7 million. So after retirement, I can see that it's very easy for them to draw gains from the investments up to 900,000 but not exceeding $1 million. So for the most part, this capital gains tax rate hike does not affect most people. If you look at this number over here, there are probably 60,000 ultra, super, duper, hyper rich who are going to be affected in either case. So this is what I think this ultra rich will do. There'll be no rush in profit taking and reinvesting this year. However, to avoid capital gains tax between now till retirement, many of these ultra-rich would actually reallocate their assets this year into high-conviction, long-term, solid plays like Apple, Microsoft, Google, Amazon, maybe Tesla, companies with long runway like Palantir or Neo. This is why we saw some heavy buying into these names on Friday. I expect more of these to come in the months ahead. Another way for this ultra-rich to avoid being affected by this high capital gains tax rate is to invest in mutual funds or ETFs that they trust. S&P might be heavily bought. ARK Invest might be heavily bought. The fund managers could reallocate the money within the funds, but to the IRS, these ultra-rich have not sold their positions. Another compelling reason why they would hold a position is that the future administration might actually reverse this capital gains tax. This capital gains tax rate hike might just last 4 years, 8 years, maybe 12 years. And explained in my last video, this capital gains tax rate hike, unlike corporate tax rate hike, does not affect the trajectory of growth companies. So what I think in the next few months, any dips in solid growth companies are buying opportunities. Companies that have a shaky future or non-guaranteed returns over 20-30 years might be sold, unless they're part of an ETF. So with all that said, I hope this information is useful to you. Please share with more friends so they can learn as well. More importantly, share with your ultra-rich multi-millionaire friends so they will not panic sell. Those are the smartest people anyway, they know what they're doing. If you found this helpful, please remember to like this video and subscribe for more videos like this. Disclaimer, all these are my personal opinion and not investment advice. Please make your own analysis for investing. Thank you so much for watching. Goodbye!